Everybody, good afternoon, and welcome to tonight's free market update. Going to be for tomorrow, Tuesday, 21st, I guess, of June. So we're just making our way right into the middle part of the year here. I want to point to something here and show you what I'm kind of got on my mind, what I'm thinking. I call this stuck in the wicks. And what I mean specifically is you see this distribution candle. This is an S&P daily chart, by the way, because you can see it right up here. But then look at the accumulation on the bottom. And what happens is price will have a tendency to get stuck just right in the middle there. And that makes for some choppy trade, makes for some difficult trade. So here's what we had. Actually, we had... well, let's look at Europe here for just a second. Here's a Vanguard ETF of Europe, which is up at one point over 3% today. Goes out well over 2.5%, but was up over 3% today, as you can see. All right, so this is on, the sentiment, I guess, if you will, the news/sentiment over the weekend of this upcoming referendum on the 23rd, and that has been termed Brexit, whether or not Great Britain will exit the EU. There seems to be the odds on this in bookmaking or whatever is about 70-30 that they stay. The polls, though, however, were a little closer to 50-50. The sentiment seems to be, obviously the market sentiment, etc., seems to be that in sort of in line with the odds, and that is 70-ish, stay versus exit. And so, we bid up over 20 S&P points over the weekend. We still go out plus 15 on the day, even though we traded about 18 off the daily high, right? So very, very choppy and confusing. I'll add to it. It's even more difficult, actually. You got Yellen tomorrow, and actually there's a fair amount of news this week, and it only starts tomorrow. There's a German economic zoo, there's Yellen, there's home sales, there's European consumer confidence, there's some EIA petroleum status, there's PMI, there's new home sales, leading indicators, all kinds of stuff going on, and then of course the Brexit vote, the referendum Thursday night. So if you think you know what's going to happen, and you may be right, but it's a binary event. It's going to go one way or the other, bottom line. This is indicative of that, and that is, you've got the wicks on the bottom, wicks on the top, prices right in the middle, and that makes for some choppy trade. So market sentiment seems to be more bullish than bearish. We did trade down to a point last week at the lows down here, 2 standard deviations off the current mean average for the month, which was as much as down 2% on the week, but recovered really, really nicely from there into the end of the week, and now I've traded today even yet higher than last week's open. So at the end of the day, we can call that choppy. Here's the deal: be careful with this mess. It appears bullish. I like it more bullish than bearish. It appears bullish for the indices. It appears almost as bearish for the treasuries. And what we do and what we've discussed in the trade room is that you make highs on selling like that, you get a weak close like this, I trade below the low of that, brings on the cover. That's pretty normal, and that would be about a 169.5 sell, which obviously is a little late now, but that's what that pattern would yield. And go to the 10-year, you can see literally almost exactly the same pattern. And to verbalize this, you would say highs made on selling, weak close. Weak is defined in the at least the lower 50 percentile. That was more like the lower 10, 15 maybe percentile, something like that. And then a subsequent follow through, which is a breach of the low of that, generally brings on cover, and that's exactly what we've gotten there. That'd be about a high 131 level, almost right into 132, but high 131 level sell stop to be short on that pattern. Keep an eye on that for the for the future. We've been talking about that in the trade room. Another example of it over here, we've talked about. So there, let me hop over into the premium video and get into all the other markets like the metals and the currencies and the ags and all that kind of stuff. But for now, for the treasuries and the indices, this is shaping up to me as more bearish treasuries and bullish for the indices, S&Ps, that kind of thing. Another one thing I want to look at before I let you go, NASDAQ goes out 0.69. Dow goes out, 0.86 on the for the Dow. So good. The Dow really woke up nicely. S&P's up 0.75. At one point today, the NASDAQ was really ahead, but I can see that the others really caught up nicely. Good deal. Good. So it's going to be choppy. It's not going to be easy. There is a lot of news that can have this thing, serve as a catalyst to have this thing reprice either way, both ways. I'm more bullish than bearish in the indices, and that is, I have to say, largely based on the UK's sort of sentiment, and that is with regard to the stay versus the exit. It appears the odds are not only slightly, but I'd say pretty substantially in favor of their stay. It's currently at about 70-30. So we'll see where it goes from there. We'll all know something come Thursday, but between now and then, we've got other impact, high impact potential anyway, high impact news in front of us, and that includes Fed testimony and the likes, all the other stuff that I mentioned a few minutes ago as well. So choppy couple of days, volatile couple of days. Let's just take it easy and keep it trade a little bit light, a little smaller in this kind of anticipated volatility, and live to trade another day. So I'll be with you again next update. Until then, you guys take care. Have a good evening.